Who says you need to get tangled with complex trading strategies? Are you ready for the truth? So today we're going to zoom in on the spiders, the Russell and the NASDAQ. Let's jump over into the spiders. It's so funny. I drew this line up here. This line up here at 514 on the S&P, or the spiders, is a Fibonacci extension. And if you didn't know, you can use your Fibonacci extensions to generate levels of potential resistance before the prices get there. In other words, what this is doing for us is giving us an idea where things may reverse and roll over. And I can't remember if this is a 1272 or the 1618. However, that is a strong level of past support. So when prices broke above the past high and kept pushing up, then the projection or the extension of the Fibonacci gives you an idea of where other traders will be watching the price action. And that may be where they say, okay, we're taking our profits here, and that would start a selling climax. Right now, this market isn't showing us that it's ready to do the climax thing yet. And what else are we looking at? The thing that really catches my attention is we've gone up 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 out of 18 weeks in a row. That doesn't happen often. If I draw a line, and I'm going to spend just a real quick time here, I'm going to draw one line, and I'm going to do the time extensions on the Fibonacci. And I'm going to go from, where am I going to go? I'm going to go from here to here. That was the last really big rally. Draw back down to here. And that gives us an idea of, oh, my goodness gracious, on 3.7, that is the symmetric move to the upside. If you've never seen that done before, these time extensions of the Fibonacci's work really, really well. It's really excellent. So what does this do for you? All it does is give us an idea we can keep in our back pocket that around the week of the 7th, which is next week. Because on the daily chart, it shows that that peak will be hit on 3.9. Do I design a trade prior to that getting there? Heavens no, I don't touch that at all. But that does give us an idea of, that's maybe if the market repeats itself, where the market will start slowing down. What's our concept here? Is basically, I can't do a darn thing with this until we get some kind of a reversal signal. This was a nice little 4-day flag back, and now we're taking off and rallying. This market reminds me a lot of the market in 2004, where it would just run up for 7 days, pull back for 3 days, run up for 7 days, pull back for 3 days. And it repeated that for almost a full year of 2004. And it was really a challenge to, one, get into a position, but then secondly, a lot of traders were anticipating the top. And so I was one of them, we would put in the downside trades only to get our faces ripped off when it continued to roll to the upside. IWM, we've been waiting for this one. Break out above this Fibonacci extension. Let's see if we go on up and hit this 212 level. The 212 is the long-term past high. And so it's nice to see that the small caps are also participating. One of the things that's really interesting that you may think about is that the Fed now is pushing back on doing any rate decreases. And we'll cover why here shortly, but that's one of the big pushback the Fed's having. And so on the Russell, look for a pullback into the moving averages. And that's what I'm going to wait for. And we can use the Fibonacci's to find out where approximately that would be also by just laying the Fib on. Give you a real quick idea of that. This last pullback, if we do a similar symmetric pullback, now I'm not sure if this is going to be the high. If it's not the high, I'll have to recalibrate. but that gives us a pullback down to 201, which puts us, or 202, which is at the 8-day, and a 78% retrace would put us at 199, and a full 100% would actually put us back into the breakout area from that hammer candlestick right there. What about the Qs? The Qs are just acting like a beast. I mean, they are. I left on the Fibonacci over here to give you an idea of what the next potential target is as it drives back up to the upside. The NASDAQ just really, really ripping out and moving higher. One of the things I'll be watching, okay, we talk about it, the clusters on the market forecast at the bottom. Well, they appear at the top also. However, when they appear at the top, like we have right here on the daily chart, and also on the weekly chart, we've got a 3-line cluster at the top that gives us an idea that, okay, we may get some kind of a pullback. If we did a similar type of extension that we did on the S&P, we're looking like we're projecting out. We'll probably hit first part of March, mid part of March, a inflection point where things may pull back. But how much? Right now, the Qs, especially the NASDAQ, is exceptionally strong. So what are we looking at? Look for a pullback into the 820-day moving average and or this uptrend line. Strong moves to the upside with the NASDAQ. So of the 3 indexes, which one do you want to trade the most? Just lay a comment in the comment section. Are you looking at the S&P? You're looking at the NASDAQ? Or are you looking at the Russell right now? Here's part of the chart that I wanted to show you. And this is last year's equity curve. As you see, the curve it goes up, it goes down. I was ahead of schedule all the way up to the end of February last year. And then February to March, it was not a huge challenging year, but you get these ebbs and flow. We got back on schedule in July, then August, September, doldrums took off. And then September, through the rest of the year, we climbed with the rest of the market and did really, really well. But just keep that in mind that no one ever has a profit loss or an equity line that goes up in a straight line. That white one there is just my target. That's the 40% line for me. So with that, here is my current line. And as you can see, basically I'm slightly ahead of schedule. And where we're sitting at is up about 7% for the year and slightly behind the S&P as of about 9 o'clock this morning. Have you ever felt like you're drowning in a sea of trading strategies, charts, and numbers? It can be so darn confusing. Today's face-to-face is where we're going to take on one of these major pain points of having too complex of a trading strategy. Let's check it out right now. Do you know that complicated trading strategies can actually trigger more fear about making incorrect trading decisions? There are approximately 10 different pain points that we traders have. One of them is huge, the fear of making an incorrect decision. Some traders believe that a complicated system is better, or does complicated just feed their ego? Because I have known some traders who,
I want it to be as complicated as possible because that's what I deserve.
and it didn't have a doggone thing to do with trading. It's just that they were so full of themselves that they said the more complicated, the better. Even if they were designing a system, they didn't design it simple enough for other people to use. And that's one of the things with AutoPilot trading. I want to make sure that it's a clear and simple approach to swing trading success. And that's exactly what we've done. How do you know you're overly complicated? A couple of steps you can take to determine that is, one, take a look at your charts. How many indicators do you have on the charts? And ask yourself, what are the values that each of these indicators bring to my chart? Is it helping me make money? And then occasionally, I would say 2 or 3 times a year, strip all the indicators off your charts, where it's just price action, where you're basically just reading the price action, the candlesticks, You may want to leave on like one moving average, like the 20-day or 50-day moving average, and go back and do some testing to see if you can see things more clearly because now they're more simple. That's a great way to make one simplification. Another simplification is reduce the number of stocks you're watching. In other words, let's say you're watching, so a lot of people think I have to be watching 50 different stocks. No, you don't. I can tell you a secret right now. If you will go to IBD and pull down a simple watch list, it's basically your leader board or the stocks closest to a buy point. There's usually about 10 to 12 stocks on that on a weekly basis, and just focus on those. How much more simple did I just help you to become in your stock picking process? Hopefully, a lot. I think it was Leonardo da Vinci who once said that simplicity is the highest sophistication. And so I'll let you chew on that. And maybe we should all go out and get a tattoo that says the sophistication of simple on our arm or maybe on our forehead so that when we want to start complicating our trading, we'll back away from that. Hey, this is a good point, especially when we're trying to make it simple. It's the trader who can manage their emotions and stay disciplined that come out on top per Mark Minavini. Remember when I said earlier that I would cover another tool that would help you, simplify what you're doing? For me, this tool is an absolute must to help untangle the trading complexity, and that's to have a journal. And that's my journal. I'll put a link down in the comment about how to get the darn thing. But there's more next Monday. My good friend Michael Lamont and the ancient trader me, we're going to basically start a new podcast. And it's called Trading Truths Podcast. Mike and I are going to be working on dispelling the myths of trading and things that traders believe that impact both their mindset and their systems. And so I invite you to join. It's Monday, March 4th at 12 p.m., not Pacific time, 12 p.m. Eastern time. Remember, simplify your approach and watch your trading evolve. So if you're interested in diving a little bit deeper into greater trading tips, check out these videos that will be popping up here shortly. And remember, hit the subscribe button and please tell your friends and neighbors about Trade Your Way to Freedom insights on Market Tech Talk. I just want to remind everybody that all the materials that we do present are for trading purposes. Traders should always pay for trading in your method prior to the risk of their own personal capital. Past performance is not an indication or nor a promise of future performance.